Hello, everybody. Thank you for tuning in to the Liberty Report. This is Friday, and this is the day we do the program called Mythbusters, and our co-host is Chris Rossini. Chris, welcome to the program, and what do we have in store?
Good morning, Dr. Paul. Well, it's been almost a decade, it's hard to believe, since the last Federal Reserve created financial crisis, and that's when they created money by the trillions to try to bail everything out. But things are looking a little shaky a decade later, and government and the media, they're always looking for excuses to explain why markets drops, and we're going to use yesterday as an example. And we want to keep the focus right where it belongs instead of the made-up excuses. So if we could start by talking about why the markets don't drop because of advisory council changes or Trump supposedly sympathizing with white supremacists, perhaps has more to do with overburdening of government with regulations.
Yes, and those things they blame, they're important to know about, especially for the people who do the trading, you know, the people who do the technical analysis, because they have psychological impact on the markets. And even when they think something is said that should be positive, if they think for the next hour it's going to be negative, it has an effect. So all those things that they so-called blame are important. But ultimately, you have to look at the fundamentals, and the fundamentals are, why are these equities overpriced, and why do they become vulnerable for rapid changes? And certainly yesterday was a hint of what can get started really out of the clear blue, but there were a lot of things going on, and they went down the list, everything from, the Virginia demonstrations, as well as talk about foreign policy and North Korea. All these things are important. And then the resignation of some of the advisors. Well, some of us think that they don't even need those advisors. The whole economy would be better if the deep state didn't have such close representation within an administration. But nevertheless, in the short run, that can precipitate a problem, and the markets can drop rather rapidly. But the big thing is that the markets get out of whack because the Fed creates too much credit out of thin air to pay for the debt, and they finance the government. And once they mess up and give us interest rates that are not accurate and reflecting savings, mistakes are made, and it's called malinvestment. Sometimes it does a lot with the CPI. Currently, it's doing a lot more to the CPI than people will admit. But the distortion is that once they create this credit, you can't predict exactly where it will go. Right now, a lot of it went into equities, a lot of it went into bonds, and the interest rates are zero. So there's so much gross distortion in the market. The fundamentals and the foundations are undermined, that when these certain events come, people get nervous all of a sudden, and they say, well, maybe this is going to affect the stock market. Maybe it will. But the real reason the stock market is vulnerable is the markets are too high. There's a bubble, especially in bonds and certainly in the stocks, and it was created by a monetary policy that is not durable. It's not going to last. Fiat money always fails, and a lot of people that work within the system, even those at the Federal Reserve, I think they know a lot of the vulnerabilities, but they would like to think they're smarter than the vulnerabilities. And I can recall in Congress, when I bring this subject up, they say, yes, gold is important, but we've learned how to regulate the money as if it is a gold standard. Well, that hasn't worked out quite that way. But yesterday demonstrated very well, looking for excuses and blame. And excuses are a lot different than reasons. And if you're a fundamentalist and you want to know what's really going on, you want to find the real reasons why it happens, so that you can change policy and not concentrate on some of the superficial mistakes made, and an opportunity for the politicians to blame certain groups. When you think about all the demagoguing going on between the various groups over the terrible incident in Charlottesville, that is important to the traders. Oh, what's this going to do? And if any more people resign, if Gary Cohn would resign, what would happen? And they bring that up, so it has an effect, but really, long term, it isn't the problem. The problem is we spend too much money, we have too much debt, we monetize the debt because we have a central bank that is there for the purpose of financing big government. So the welfare system continues, the bubbles keep building in the entire system, as well as financing the wars. Unless they address that and instead just concentrate on these superficial things, we will not solve our problems, and we will see a continuation. If they can keep it together for another year or two, just means the bubble is going to be that much bigger and the crash will be that much worse. But most people in the country, even those who are making money in the stock market, know there's something wrong out there, and they're preparing psychologically as well as they're struggling to protect themselves financially because they know this can't last.
Yes, and the media focuses on the superficial because they could squeeze it into a soundbite to try to explain something that's pretty complex. The market has billions, millions of transactions. But we like to look at the fundamentals, and one of the fundamentals that everybody tries to get away from, but you can't, is the unpayable debt that the U.S. government has racked up, unpayable welfare promises that they've made, underfunded, unfunded pensions. If you could talk about that, and how that is the core issue of the problems that we face.
Yeah, and that is so massive that nobody has an accurate number on it. And the demographics are bad. You know, less people getting into the workforce, less our population going down, and some of the young people aren't even getting jobs, and they're staying at home. And yet there's the elderly, there's more in retirement. The funds just aren't there. The European countries are facing this, all the countries of the world, because this is not a problem in the United States. I mean, we can see it when it overwhelms a country, you know, like Zimbabwe or Venezuela. And I figure most people say, yeah, that's just that country. But we're in this together worldwide. There is a financial system that is worldwide. And fortunately for us, on the short run, it's a benefit to us because we're in charge of it, because we get to print the reserve currency of the world. And it messes up trade, actually gives us a trade benefit, but other people say, hey, no, we have to force people, you know, to buy our stuff, and we should have trade barriers, and we should regulate tariffs and all of this. But they're just trying to cover up the mistakes of the financial system. So the problem is there, and debt is a big issue. But you know, if you talk to a liberal and want to know about some of these problems, as well as why do you have recessions, their answer is the people just won't spend money. You know, that people, it's because of lack of this enthusiasm to spend, and they recognize that for some real reason they believe that consumers quit spending. It might be because they lost their job or they're worried about their future and they start saving money. So they continue to worry about that, and they say, well, if they won't spend the money, and this is government, and the government interventionists, they say the government has to spend the money. Well, what if they don't have a lot of money? Well, print the money. So they believe that the recession and depressions come from a lack of enthusiasm to spend. Of course, that is true, but that is a symptom. And why do they get to that point? It used to be it would be cut off a lot sooner, like the Depression in 1921. They had it, and they didn't do any of this stuff, and it was over in a year. But now, you know, there's been a false trust placed in the United States economic and military power and in the dollar, so they just allow us to continue to do this and cover it over, believing that we live in a new era. Well, we're moving into a new era. The old era is ending. We ought to recognize that, but the old era that's ending is the progressive era, the era of paper money, fiat currency, and endless debt that we can't pay, and this debt will have to be liquidated one way or another.
Right, and all the excuses that we hear from government and media, they, without fail, try to hide the Fed from the as the culprit of the problem, whether it was the NASDAQ bubble, the housing bubble, and they actually look to the Fed, ironically, as the solution to the problem, and the Fed prints even more trillions of dollars. So if you could talk about how their solutions actually make the problems worse and ensure an even bigger financial crisis in the future.
Well, the inflation is the problem, and that is inflating the currency, printing too much money. So a good analogy is pouring gasoline on a fire. The fire of inflation is like they just pour on more debt and more printing press money. And this, really started with the crash that surprised some people. It didn't surprise the Austrian economists in 2008. And yet the only answer was to print more money. So they had a balance sheet of 800 billion and went up to $2.4 trillion. And they're shocked that it didn't work because the old analogy, they were pushing on a string. If the climate psychologically and business-wise wasn't ready to rebuild America, it just doesn't work, and the money sits there. It benefits the banks, it benefits the stock market, benefits the bondholders, but it doesn't, stimulate real growth in the economy because we've erased the most important measuring stick of entrepreneurs and business people should use, and that is the price of money, a true price of money to tell us what's going on, and that, of course, is the interest rates. Right now, there was an article, I think today, that said that gold probably this year is equal to or better than the stock market, in spite of, right now, most people think the stock market is still in a big boom period of time. But, in 2008, when all that printing press money started, gold was $800 an ounce. And gold had already been, it got too high. There had to be a correction. Matter of fact, in these last 7 years, gold was really in a pretty good slump, an adjustment period, 4 to 5 years, and it went down. But it's still 50% higher than it was in 2008. So in spite of all this, the fundamentals are that real money tends to increase in value, or at least in price, and compared to the ratio between gold and the dollars, and that has held pretty true. And right now, with this precarious atmosphere of the market, stocks and bonds, people are going toward the metals, and on the long term, that is what's going to happen. That doesn't mean that anybody knows exactly what the ratio between dollars and federal notes will be on day-to-day basis. They can estimate and they can predict long term. Of course, I started looking at this when gold was, there were $35 to an ounce of gold, and I knew what the long term was, but there were sure a lot of ups and downs that some people, were able to trade this, get in and out, and be technical analysts. But if you look at the fundamentals, which controls and should give us an indication of philosophy, you can figure out what's going to happen, and exactly what was predicted by the free market economists back in, even in the 50s and the 60s, and certainly when Bretton Woods failed in 1971, the predictions have been pretty darn accurate from the free market economists. And believe me, the free market economists right now believe sincerely that things are out of whack, and that the markets are not priced correctly, and that we can expect a major correction. And once again, what we want them to do is put the blame on the proper place, and that is, of course, the Federal Reserve and their efforts to take care of their friends with legislation, in the U.S. Congress, because the housing bubble, too much credit, too low of interest rates. At the same time, there was affirmative action, the Community Reinvestment Act said you have to make loans to people who don't qualify. And a lot of that has continued. Very, very shaky. So there's no reason to live in a daydream and say, well, maybe we live in a new era. This is different. These markets are just great. That story's been told many, many times, and it's always been wrong.
Finally, let's close the show by really driving our point home here that when the next crisis comes, and it's unavoidable, the Fed has already created the conditions for it, it's not going to be because of a fat finger error or short sellers or high-speed traders, speculators, or even bond vigilantes. It's the Federal Reserve. So Dr. Paul, please make the case for sound constitutional money, how that's the path to liberty, and perhaps it's time to finally end the Fed.
And it wouldn't be all that complicated. Economic understanding is much further along today than it was with Adam Smith in the beginning of our country. But they were pretty much on target even at that time, because They created the first currency in Continental Congress was the Continental dollar to fight the Revolutionary War, and it became worthless because they just minted too many coins that had no intrinsic value to it. And the founders were very annoyed with debt. Jefferson wanted to put it in the Constitution that you couldn't have a national debt. Unfortunately, he didn't win that argument. But the argument for sound money won out. They said that only silver and gold could be legal tender, and there was no authority for a central bank. But there was undermining of that from the very beginning and systematically, but in a relative sense, we were better off, you know, in the 19th century, even though we had ins and outs with national banks. But it really became bad, you know, with the development of the Federal Reserve. But the knowledge and the understanding of the business cycle and economics and you know how prices are made. Nobody knew back then about the subjective theory of value versus the labor theory of value, and there's a big difference about these two differences. And under those circumstances, you know, things got bad because we didn't follow the rules. So my suggestion is, for a good understanding, or a good way to go, is make an attempt to understand what is in the law. And in the law is that you can't have anything else other than gold and silver as legal tender. That is by the government. I don't believe that is the case. There wasn't a prohibition in the Constitution that thou shalt not use other things as money. But I think that legalizing, you know, competing currencies would go a long way, but nothing gets solved unless the appetite for big government ends. Then the appetite is overwhelming. They are starved for big government. They're dependent on big government. And I'm not talking about the many millions who are dependent on welfare benefits and handouts and food stamps and all this. I'm talking about corporate America, because they are very dependent. And when you look at the military-industrial complex and the banking business that makes so good and who gets bailed out, that has to end. And a lot of people want to end that, and they say, yeah, that's what we want to do. Let's outlaw lobbying to Congress, and let's do these things, or let's put a law on balance the budget. That's not the answer. The answer is the appetite for government has to change. We have to have an understanding that the purpose of government and the purpose of our Constitution is restrain the government from interfering with our liberties, and the government is there to protect our liberties. And that means the marketplace, that means voluntary contracts, a voluntary system, and get rid of the authoritarians. And right now, when I look at all this fighting going on, like at Charlottesville, there are two factions just fighting over things and neglecting the real issue. They have to realize that authoritarianism is the problem, and there's too much authoritarianism, and it isn't coming from the far left or the far right. They're coming from both places. So, but it's used. These issues that we see and these problems we have are used to try to build up the radicals on both sides. But if we had a understanding by the people that they want a government to protect their liberties, and people want to take care of themselves and have confidence that they could do it, there are still people in this country that know and love that. And just say, get the government out of the way. Just think of solving the medical problem. Just get the government out of the way and let people take care of themselves and let them take it off their taxes. That's about all you'd have to do to start the transition away from 100% dependency on government, mess it up so bad that you have everybody screaming for a one-party payer, you know, for the system, and advance toward, you know, an authoritarian socialist system. So I think it's not complicated. We had a taste of it. We have benefited by it, but we are a long way from it. But we're in a mess. But I'm also very optimistic that the message of liberty, the message of a sound economy, even the message of the danger of the Federal Reserve, we're so much further along now. You know, the Campaign for Liberty over these last 8 years has done a miraculous job on building up grassroots support for getting the Fed at least audited, expose the Fed. So it's a lot different than it was when I first went to Congress in '76. You weren't allowed to talk about that. That was politically incorrect and economic nonsense. That's not the case anymore. So on the one hand, there are some positive things. On the other hand, on the short term, and this is what the people have to deal with on a day-to-day basis. It's a mess, and so it's a struggle between whose philosophy we're going to follow, especially after the crash. And of course, we've been pretty precise on this program on exactly which policy that we want, and that's peace and prosperity that comes from a free society. So with that, Chris, I want to thank you today for being with us today on Mythbusters.
Thank you again, Dr. Paul.
And I want to thank all our viewers today for tuning in, and please come back soon to our Mythbusters and our other programs on the Liberty Report.